Hi, it's Lee, and welcome to the Test Your Economist. It's abundantly clear that the macros, or the Fed, have taken the driver's seat with Tesla's stock price for the time being. The S&P was experiencing overly high market P ratios, obviously due to the low rates, and then all the government spending. So rates increase, and the markets react accordingly. The banks offer an improved return on your money with higher interest rates, so people sell their stocks and invest in bonds or cash. Except these are just nominal returns, not real returns. So I just wanted to go over a view of the global economy as far as Tesla should be concerned. We have two headwinds against us in these sorts of times. There's the opportunity cost of higher interest on cash. But not only that, these higher rates affect the economy in other ways too. The cost of money has risen. For example, when I financed my Teslas, I locked in a rate of 4.5%. It's now risen to just over 7%. That's quite a big difference. That obviously puts off a lot of consumers as it appears more expensive. Although, in reality, even 7% is struggling to keep up with inflation, so it's almost 0% real rates. In other words, if in a perfectly efficient economy, your pay is increasing as much with inflation, then higher rates are still affordable. But inflation doesn't increase equally across the board. I mean, just look at the commodity prices. Some are up 200% over the year, others are down. If you worked in the industry that is seeing the larger increases, then there's a possibility you might have received a pay rise higher than inflation. It's also the reason why some items in the supermarket have increased more than others. Inflation is not spread evenly across the board. So some people have experienced some great pay raises, and some have seen their assets increase more than others too, meaning there are people doing well in this economy, meaning there are people with enough money to still buy a new Tesla, despite a lot of people also suffering. But are they losing their jobs? I remember in the global financial crisis, when it was so bad, I had friends losing their jobs through downsizing. But right now, we're seeing a relatively low unemployment rate. And sure, I understand that this is manipulated to a degree, and there are other factors in play too. However, I also like to observe. When I go out to restaurants and talk to the staff or visit other businesses too, I generally ask them how business is, or if they're short-staffed. And generally, they tend to say they struggle to get more staff in. I like going out for dinner with friends, especially during the week when it's quieter. But these days, I often have to make a reservation, and the restaurants are packed. And these are the top restaurants in my city. I just like to observe firsthand what is happening, and it looks like people are still spending plenty of money, likely hence the inflation we're experiencing. I do the same looking for Teslas. I recall in Los Angeles at the start of 2019, being driven down the freeways, I was counting all the Teslas I could see and trying to count them relative to Toyotas, and I couldn't believe how many I saw. This was pre-Model Y time too. And sure, Teslas are more popular in LA, but still. I did the same thing in 2015 when I was in Seattle, counting the Model S's I saw. And right now, in my city, I've never seen so many new cars ever. New Teslas, of course. Especially now the Model Y has arrived, and there is still a waiting list until November. This is not a particularly rich nation or city, yet there are so many of them. And this is with the high interest rates. On top of that, there is the demography of the largest generation in history going into retirement, freeing up a lot of jobs. Someone needs to replace these workers, and Generation X is not a large enough generation to fill in all these positions. A lot of the baby boomer generation also have assets that have appreciated well in the last couple of years, improving their retirement too, and can thus afford Teslas. Anyway, essentially we're seeing PE ratios squeezed by these rising rates from the Fed, hence the lower PE ratios. It also has an effect on property prices too. Suddenly mortgages cost more, and people can afford less to buy a house. Therefore, people have also lost equity in their homes, and are either less able to borrow more on this property, to buy a Tesla for example, or simply don't feel as wealthy due to losing 20% or so value in their house, which is likely their largest asset. And this isn't 20% of their home equity either, that's 20% of the asset, so possibly closer to 40% of their actual equity if they have 50% mortgage. On the other hand, a lot of people are still way up on the price of their properties from just a couple of years ago too. And perhaps their house was previously at 25% equity, and even now, due to the increase in the asset, they are 40% equity of a more expensive house, and have thus more than doubled their actual equity. Of course, there are the unfortunate people who are not in the property market and thus suffer, which is why the poor really do suffer with inflation, and we see more disparity with equality. Now, what about when Texas is operational? Tesla may hit a run rate of around 2 million vehicles towards the end of next year. just in the US. That is just over 0.5% of the US population. In other words, Tesla only need about 0.5% of America to buy a Tesla next year to sell all the cars they make. Oh, wait, no. That would be the rate at the end of the year. So even less over the entire year. And hopefully by the time we are out at the end of the year, we've seen the worst part of the recession and inflation and are starting to see the recovery. Oh, and don't forget, that's with a $7,500 discount too. Now, even if sales for new cars drop significantly, there is still going to be likely at least 10 million car sales a year in the US. But if the overall US car market took a 30% hit, then that doesn't mean Tesla will. The EV market is still growing, and it's growing as fast as supply can deliver, not demand. If Tesla need more demand, then there are two very easy things they can do. One, of course, is simply drop prices. Tesla can drop prices a massive amount and still make incredible margins. A lot of commodity prices have dropped now too, which means Tesla margins will have increased even more. So Tesla could easily drop their prices and still make amazing margins. Not to mention, when Texas gets going, the cost of producing a Y there will be unbelievable, allowing even more room to move on price while still maintaining profits. And again, the $7,500 tax credit. I know I just said that before, but it's just such a big deal, it's worth saying again, because it barely seems to be priced in. In other words, Tesla don't need to drop their prices. They can probably raise them, if anything. That's how crazy it is. That's just America though. The rest of the world may not be looking as promising. On top of that, the US dollar has strengthened significantly, reducing overseas sales, ASPs. It doesn't, however, affect margins, as Tesla have done everything they can to source locally as much as possible. I don't know how clever Tesla have been in hedging the US dollar with overseas currencies, but it's likely to have some effect. And given that over half of Tesla's sales come from Giga Shanghai, it could be noticeable. Then there are the actual economies in Europe and China to consider too. Eurasia is a huge market though, and Tesla are really only selling the low-cost LFP versions of their vehicles there. On top of that, Tesla did raise their prices on these models not too long ago, and they've reduced their production cost significantly with this latest production line improvement. So I think they have quite a bit of wiggle room when it comes to margins. There should be plenty of demand for that car in this market, despite what some people are saying. Remember, this is the most popular car for sale today, and despite China ramping up so much, we still aren't close to meeting total demand, at least not at the market clearing price. The Model Y rear-wheel drive is at a lower price point than the long range, and if the price drops just a little due to being in that lower price segment, the demand will increase exponentially more than compared to dropping the price of the long range by the same amount. There are so many more people that can afford a lower cost vehicle. Dropping the price to say €45,000 would be a massive difference, not to mention all the other associated cost savings and potential subsidies available. The other thing Tesla can do to increase demand is start advertising. I know people seem to object whenever I suggest this, as if it's not in Tesla's ethos to advertise, but it's more just about the fact that Tesla has never needed to advertise. It doesn't mean they never will. Elon has on numerous occasions mentioned the possibility. He's also said it would be more informative and educational rather than just clever advertising that cajole you to covet a new vehicle. And perhaps it would be a great way to provide consumers of little understanding truly how amazing a Tesla is. We're in echo chambers, but often when I talk to a lot of people about Teslas, they don't have a clue. Now, to be clear too, before you comment, I'm not suggesting that I want them to advertise. I'm just saying it's another avenue to increase demand. I believe Tesla and Elon will make the right decision as to whether they will or not. It is, however, an option for them. So sorry if this was a little bit over the place. I was just trying to articulate some thoughts about all of this. I'm not trying to say that the economy is going to be great or anything. I'm just trying to think this through as a Tesla perspective. On the other hand, I also have to hope that I'm not trying to just manipulate all these factors for my own confirmation bias. Remember, I have my money supporting my beliefs. Although there is a chance that there may be too much Tesla bull in me. So please comment as to just how you see things and where I am potentially too bullish. At the end of the day, there is always the fact that if this is that hard for Tesla, then it's going to be that much harder for the competition. And if they don't make it, then there is more potential demand pointing to Tesla. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.